Good morning, everyone, and welcome to Nadex Morning Analysis. Today is March 18th, a Thursday. And before we get into looking at hot spots in the market and a little catch up on what's going on and what's moving markets, a quick intro. My name is Todd Rich. I'm with Nadex. From Keep Trading Simple, we have Brian Caprice. And we need to share this first, that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, so with that, just the top level, the high level story, the Fed did go through their notes yesterday. The highlights, one, they are seeing inflation, and they're going to expect to see inflation through this year, through 2021. But they aren't going to do anything about it. They're going to leave an easing monetary policy in place through 2023. That is because they want to make sure that they support the recovery. Now we are seeing some changes at the back end of the yield curve, and we will talk about that, what that means and what that is. But the high level is we're seeing inflation. They're not going to do anything about it through 2023. Now, yesterday we had spoken about one product in particular that is definitely linked to inflation, and that would be gold. That would be gold. And so before we get into anything else, I really want to talk about gold. What happened with gold? It was trading in a range. We told you, hey, there's this range. Look for a breakout of it, because when the Fed talks, something's going to happen. We just didn't know if it was going to get crushed or if it was going to pop. Here, Brian, I'll tell you what, I'm going to let you talk a little bit about the Fed and gold, because then I want to look at the chart and talk about how that moved, because I think there's a great lesson there.
Yeah, so obviously gold is linked directly with inflation. There was a lot of gems to pull out of the speech yesterday from the FOMC. And the reason why I wanted to keep this up here is because if you guys can get over there and check this one out, it was terminology we haven't heard before, and it talks about how, the Fed is now officially behind the curve. Powell's even proud of it, but he made a potentially costly mistake by admitting to having to quantify what a moderately overshooting inflation rate means. Remember, gold is linked with inflation as a way to kind of hedge against it. The Fed raises interest rates to control inflation, but talking about allowing us to moderately overshoot inflation is something we haven't heard before. So it's something that's new. And an interesting statement here that he makes too is, where is it? The Fed sounded upbeat on economic projections, but also kept referring to the fact that they want to see actual progress and not forecasted progress before changing anything in the policy framework. So gold is one of those interesting things out there. Now, some of you may be newer to the broadcasts. There was a webinar that I did for Nadex, 6 months, a year ago. I think I've done it once or twice maybe, called Parabolic Retracements. It's one of the strategies that I teach. This is exactly what parabolic retracements look like, and it pops up on about 5 different charts right now. So I'm going to be changing through charts here, but you're going to probably see it on multiple charts. This is the Fed talking about, we're not changing anything. We're going to let the economy run hot. And then they talked about moderate, and again, people don't know what this moderately overreaching actually means. But they just know that we're going to keep rates really, really low, which is a sign that inflation is going to grow even more. That's what led to this initial pop up again. And then what we saw was, another little tiny push higher. And then all of a sudden, I don't know what that means. What does that mean? Is anything changing? No. And then that brought gold right back exactly to where the start of the move was yesterday, right? We were sitting right here. I don't know if you guys can see my cursor where it's moving in the middle. We're exactly where we were yesterday. So all the hype and hoopla of, what the FOMC could do, what the projections were, led us to a huge increase, about a $30 increase in gold, and then it crashed all the way right back down again. So this is where we are, and kind of the same analysis holds true. Again, we're at a level right now where you got to say, hey, listen, there were some sellers or some buyers stepping in right here, and the answer is, yeah, they absolutely were. In the overnight, again, this is the setup that I've been mentioning. The European market, or really the UK market, has really been dictating where everything is moving. I can show it to you in the oil chart right here, right where we touched this little 30-minute level that formed pretty much late last night around 10 o'clock. As soon as the UK market stepped in, they said, oh, no, 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 gold, and slammed it all the way right back down again, about 20, 25 points in the overnight session. So again, talking about overnight moves, there's an overnight move for you back into an area of buyers. Now, big question is, in 30 minutes when the U.S. trader steps online, we know we have some buyers in there. Is this the takeoff point to kind of bring us back up into that 1745? And it absolutely could be. I mean, again, we've seen buyers step in. I've drawn this pattern a few times for people here. This kind of little, higher, the higher wicks in there. So it's an area of buyers, and that's why it stopped the descent. I will say 1722 is still a level down here that's been tested twice. So not the freshest, but we know we got a little bit of a backstop. So I would say there's a potential for a bounce today. Remember, everybody that got into this a little bit too late, that got long, is now trying to get out of their positions because it's gone against them. So it's kind of this is the danger of getting into something getting into something after news is great. You're like, oh, no, it's going to be okay. Okay, good, I'm good. And then you walk away and then you come back and it's all the way back down here. Yeah. So the goal is to get in first or retrace, and that's how they come through.
Yeah. So, I mean, I just want to show this on the NASDAQ. Boy, I need some coffee this morning on the Nadex platform. Wow. Okay. So, and it was interesting. I mean, this is the chart from yesterday. All I did was extend out the levels that we were talking about. Gold was definitely range bound between the 1725 and 1735 level. We saw it kind of channeling. And yesterday morning, we said this thing, once the Fed talks, once they start speaking, it's going to probably break out of this channel at some point. And I mean, it's amazing. Here it is, right when they release the announcement, right when they're talking. I mean, exactly at that moment, it just spiked and it kept going. And if you're looking at binary options, in fact, let me make this a little bit bigger. There we go. I mean, it went through 1, 2, 3, 4 on its way to you know what? If I do this,
it was 10 strike prices. Yeah.
Oh yeah. So
if you guys that attended yesterday, you guys know that when we talked about the shorter duration binaries,
it's the 2 hours. You know what? Right.
Yeah, the 2-hour binaries, and you can see, Justin, this is a 30-minute chart I have up on my screen. If you want to switch back real quick. Yeah. Just for gold, it went from 1729 up to 1750. So let's mark this off, from here to here. Whoops, where is it? To there. That was what? $20 worth of movement. If you guys look at the 2-hour binary strike difference, it's 3. So almost 7 strike prices to the top side in 1 hour. So could you have gotten a rather cheap, low risk cost binary in there? Yeah, you could have.
So yeah, right. I had forgotten because I was sharing the daily chart. Here I'm trying to force in today's 10 a.m. But we had, right now we don't even have strikes up above there. We would have had to have added them if it did that today. Right. But yeah, I forgot. We have much closer strikes in the 2-hour time zones, as you can see. So, I mean, you can really see how it blew through a lot of the shorter duration. And Brian actually spoke yesterday, 2 days ago. Man,
today's Thursday. You're right, Tuesday.
Today's Thursday. 2 days ago. Those recordings, by the way, from our How to Day Trade at Nadex event will be going live this evening. So they'll be up and available before the weekend, so people can go back and look at those. But you could see how gold, and now it's right back down at that 725 level. We got to wait and see what retail traders want to do today as they come in and take a look. But gold definitely moving around. We said we'd show you some hot spots. Gold is definitely one of those hot spots. Brian mentioned parabolic moves. I know he did a webinar a while back. I think it's time that we bring him back and have him do that again, refresh it, make it all current. We'll look to do that. But if you want to catch the webinar, I think it was actually from a year ago or thereabouts. I dropped a link into the chat. So you could at least go back and review the concept. But I think it's high time we had you back on to refresh that one. It's a great one. All right, let's keep things moving along because I know we want to get out here in about 5 minutes. The other thing that we're seeing. We talked about the yield curve. All right.
Mhm.
So the yield curve has been pretty flat. That means interest rates in the short term haven't been too different from interest rates further out at 10 years and 30 years.
Mhm.
It was a very, very flat yield curve. You would normally see yields further out in time be higher, the prices of those bonds be lower because bond price and bond yield are opposites, and you would see a curve, a steepening of a curve. We haven't seen that in a long time. We're starting to see that curve come in.
Mhm.
The 10-year Treasury note in the U.S. Is highest it's been in a couple of years. We're seeing it out in 30 years as well, and that's actually normal. You'd expect to see a curve. So the fact that it's starting to come back into a little bit more of a curve uh, means people are anticipating an actual recovery out of this. But
Mhm.
what that means for bond prices further out in time, if the yields are higher, the prices are down, and we're seeing that downward pressure on bonds out at 10 and 30 years, 20, 10, 20, 30 years, have an impact on certain stocks. The NASDAQ, one of them, where
Yep.
there's pressure on the NASDAQ, but the Dow's hanging in there. You want to talk a little bit about that, Brian?
Yep. Yeah, here's the NQ chart from yesterday, and kind of the same pattern, right? Came back up, popped all the way to the downside. Now this one has a couple more things in play in it as well. Yesterday morning we were sitting back over, kind of right in here. I guess yeah. Yesterday morning we were sitting back in this range. We expected the same type of pop. It was interesting that it came down to kind of a very minor level. Um, I would say it was a very, very minor level. Is it one that I stepped in on? No, I didn't do it. I was actually broadcasting at the time with my students when it came out. And again, very, very fast. Kind of chopped sideways, and you can see this is basically signifying really indecision. Like what's going to happen? What's going to happen with the Fed? What's going to happen with the Fed? And then all of a sudden it came out and it launched it much, much higher. Now we had a small level here. You know, I told my students it wasn't the best of levels. It was small. Would it hold back FOMC? No, probably not. And I said there was two of them. I was really looking for something much, much higher up. But I'm leaving it up here because to show you that, again, would I be stepping into something up here with FOMC? No, I would have no interest in doing it. But it did punch through. It went through. But we're always talking about these previously violated zones and Harry Potter trades and pushing things through and old levels becoming new levels. And, you know, again, here was a level that, again, not really much interest. It was a very small level created on like a 15-minute chart. But look at it. Bounced through, came back up, used that same level to take off again, went right back up again. And then this is where some of the better entries started to kick in. This is a very interesting situation because not only did we hit this previously violated zone twice, some of you may look at this and say, wait a second, I know what that pattern is. I've done, basic, technical analysis, right? Whoops, there. Whoops, I'm hitting it this way. There. You guys know what this is, right? I hope everybody knows. Well, guess what? That's a head and shoulder. You guys should know exactly what a head and shoulder is on that one. Again, when you break through the bottom, it goes through. But at the end of the day, what is it? It's also a parabolic retracement. It brought us right back down to where we were yesterday. And one of the things that we'll say about this that is pretty interesting, we do have buyers a little bit lower. There's a small level down here, and then 12,887, I think, is another area. The interesting thing about this is all the positiveness of people getting stimulus checks is already gone.
That happened fast.
It was gone. It was bam. I mean, it was in. Money's in the account. Boom. Money's paid. It's out. It's gone as fast as. And again, all the positivity about that is already gone. And we're already starting to see things roll back down again. So I would say today, I mean, with everything they've heard, we've seen some data in New Zealand as well as Canada, which is not positive. None of this is necessarily great. So again, I would be looking for levels of basing here. And again, you can see pullback, pullback, pullback. We'll see when the U.S. trader gets in if it finds 12,887. If not, we may get pushes down even farther today. All the way down into this range down here at 12,759.
So the point being here, again, we're just trying to identify hot spots in the market, and gold definitely one of them, and NASDAQ index the other. Where are things moving? And I'm trying to, and what I'm showing you here, I mean, these are our daily binaries in the NASDAQ. These have got 7 hours, just over 7 hours to go. I mean, there are plenty of levels, and this 12,860 levels, just one level below. I know that Brian identified, then he was looking at ones even beneath that. The whole point being, we think the NASDAQ is going to be moving around today as people digest and reposition themselves. And there's going to be opportunity. And with the binary options, remember, it's all defined risk, defined reward. You know what you could potentially make or lose getting into a trade. And what's even more interesting is if you look at the volatility levels and with how much time is left in the day, some of these strikes, the prices of the binaries aren't all that different. They're all just around that 50 level. That's the volatility coming into play because volatility will impact that price of the binary. All right, I know we want to get out of here on time today. Brian, I'm going to flip it back to you. Is there anything else you want to share with anyone before we wrap it up for this Thursday?
No, I would just say the way to play this morning, now that everything's been digested, go down to the 15-minute levels, look for levels of basing on the 15-minute for an immediate pop off the open, but then look for those retracements back at about 10 o'clock this morning because there's no news from today or into tomorrow morning that we need to really worry about.
So retracement is the word of the day. I feel like we're on Sesame Street. We got to learn about today. We're going to learn about retracements. All right. If you've got any questions for Nadex, please email us customerservice@nadex.com. Brian is also very accessible. Please feel free to email him support@keeptradingsimple.com. With that, we want to give you a full half hour to get ready for the open. I think it's going to be an interesting open today, and we're going to see some things moving around. Again, keep your eyes on gold and the NASDAQ. With that, I want to thank you for joining us today. Brian and I will catch you tomorrow morning, and good luck in the markets, everyone.